Hey, it's Mo. I am going to show you 5 basic candlesticks that you need to get started in being successful in trading. Once you start identifying these, it's going to make your profit-making process so much easier. So the 5 that you really need to know and you need to focus on are these ones: Doji, big wicks, engulfing, hammer, and inverted hammer. So I'm going to walk you through all of these right now. A doji. Really what a doji is, probably the most common thing that you're going to see on a chart. It's a day that really doesn't do much. It's just a little bit of a price action, goes to the top, goes to the bottom, finishes in the middle. You see it a lot. It means you really don't do anything. Just let the day pass. Maybe there was not a lot of volume. Maybe there was equal number of buying and selling volume, but the stock price didn't really move anywhere. That's typically what you're going to see there. Big wicks. Now these are the opposite. These are days where you're seeing a lot of volume and you're seeing a lot of price action. The stock price moves all the way down to the bottom, all the way up to the top, and it kind of finishes the day right in the middle where it started. So there was a lot of push and pull between bulls and bears, but we just kind of finished off in the middle. And it really means nothing really came of it. There was a lot of volatility during the day, but the next day, we have no idea what we're going to see. That's an indication for you to be very patient and see what's going to happen. Inverted hammers. Inverted hammers and hammers are typically, you're going to kind of see the same pattern. When you see an inverted hammer, you're going to see the stock price move in the opposite direction. So if you had the stock price moving down, 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 you see an inverted hammer, you know the stock price is going to move in the opposite direction the next day. If you see this, let's say you have the stock price climbing, 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 all of a sudden you get an inverted hammer where the majority of the price action is at the top that day, you will typically see you're going to head down the next day. That is something that you can see when it comes to hammers and inverted hammers, and those are really helpful in knowing what's going to happen the next day and kind of not predicting, but for lack of a better word, predicting where the price action is going to go. And finally, your engulfing candles. These are your buy signals. You hear me say it all the time on the morning show. I need an engulfing candlestick to do something. It's basically, you could have anything. Maybe it's a doji. Maybe you just have a little doji candle, and then the next day you get a big engulfing candlestick with a lot of volume that takes out the previous day. Same thing goes in the negative direction. Let's say that you have a doji, you want to short something, big engulfing candlestick down, engulfs the previous day, and you have your downward price action. The first one I'm going to show you is the doji, and I'm going to use Apple as an example. You actually see a lot of them happening in here. So these little guys here where you didn't really have a lot of price action, those are going to be your doji candles. You notice you had one a couple of days ago. To be honest, you're kind of getting one today. It's not really giving you anything. The wick on top, this is not long enough to call it an inverted hammer or an inverted hammer. So you're just looking at these little dojis. Doesn't really tell you a lot. The price, you notice that you have them in here. It could climb on you. It could go down on you. But for the most part, they're really just going to go sideways. They don't tell you a lot. It's not an engulfing candle. You don't have a buy signal. It's not a hammer. It's not going to tell you that it's going to go one direction or the other tomorrow. So these are kind of the days where you just sit there, chill, and let this one go by. The next one is big wicks. And these are you're going to see these often, especially on volatile days. But you notice that right here with Apple, you had a very big wick, and this happened on May 16th. So what this means is that the price moved all the way down. It came down to this level, moved all the way up, and then it kind of just closed right in the middle. So you notice that you do have these days in here where you just get these big fluctuations. To me, those are days that you just got to be patient and you don't do anything with the stock. You do not want to get caught up in something. Let's say, remember, this at one point looked like it was a big engulfing candlestick. This happened yesterday on Lockheed Martin. Let me pull that up real quick for you. LMT just popped into my head. But you notice it didn't have wicks on the bottom, but this is what can happen with those big wicks. So it could end up like this. You get a stock that moves all the way to the bottom, and it filled this out, and it looked really good. And you're saying, I want to enter this thing. But it pulled all the way back up on you. And that's what can happen. Not only can it pull all the way back, it could have pulled up to here and then came right back down, creating that big wicked candle that could burn you in the long run. The next one is hammer formations. So when I'm looking at this, I could see that I had a hammer right here. I had a hammer right here. So typically what that means is that when I get some type of price action that's moving and I get a hammer that develops, it's going to send me the opposite direction. You notice we were falling here, falling here, falling. All of a sudden you got this hammer and boom, the following days it continued. Here, started moving down, down, down. You got this hammer, boom, it moved up on you. So these hammer formations always, not always, very frequently tell you that there's going to be some type of change in direction. So we could see the same thing with inverted hammers. And what we're going to see here is where the bulk of the candle is on the bottom. And you can see that a couple of times here in Apple. You get the stock price moving up on you. All of a sudden, you get this inverted hammer like that, and you start to make that move down. Again, stock price moves up on you. Here you had a rather big inverted hammer, got a couple of days big, and then it moves down on you. So what we're looking for with inverted hammers is the same thing, but you're getting that change in direction. That means that the volume is switching. That long wick, this wick on the hammer, this indicates uncertainty. The volume's changing. Buyers are becoming sellers and sellers are becoming buyers, and that's why you have that discrepancy. And the last one is an engulfing candlestick, and I'm actually going to show you this on a 15-minute chart because it doesn't matter what chart you're on. An engulfing candlestick is an engulfing candlestick. So when looking at this stock, this is Google right here. What I'm looking for is a candle that takes out the previous one, so meaning that it's bigger, it's thicker. Even if you have some wicks on here, it just takes out that previous one. It basically engulfs it. So what I'm looking for is right here. And remember, guys, when you talk about engulfing candlesticks, this is an ideal situation, what I just drew. No wicks at all. This is just filled. You're always going to have a little bit of something. It's very rare that you're not going to have a wick. Even on these ones, you have a 1 cent wick on them. So when you get these engulfing candlesticks, these are your buy signals. So with those 5 candles, that is going to put you in a better position to be a good overall trader. The more you understand, the less you're going to fear. Catch you on the 45.